Today's market call is presented by Robinhood. Take charge of your trades with Robinhood's powerful new free desktop trading platform, Robinhood Legend. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. January, we hardly even got to know you as we sit here, Jan 31st, Friday, a little after 10 a.m. on the East Coast. Dan, Nathan, Guy Adami, a special market call. How are you, Dan?
I'm doing great. We had a heck of a week, Guy. You're kind of exhausted. I'm a little exhausted. We started out the week Monday morning in Miami. We were doing pods down there. It was Global Alts iConnections Conference. But you and I had a lot of fun on Monday because we got to talk about one of the big risks that we think was underpinning this AI trade. It all kind of came together in one fell swoop from a place that I think very few people expected it, Guy. So we were breaking that down on Monday. It felt really bad. Maybe Amanda wants to bring up really quickly the 6-day chart of the QQQ to show that gap. And you know what? What did you say yesterday on the market call? That Carter Braxton Worth often reiterates the fact when looking at a chart that most gaps are meant to be filled. Is that the case, guys? Is that what we got going on here in the QQQ?
Well, it appears that way. And, you know, it's amazing, the resilience of the market, because, you know, that's the cues. If you want to put up an SPY chart just to sort of illustrate, you know, it looked as though earlier this week, you know, we had that gap lower. Things were going to start to cascade. And at 61.08 here, I think we're about 20 handles away, or low, you know, 1/3 of 1%, if you want to break it down, from an all-time high in the S&P 500, which I believe was 6128-ish. And I think that was made, if I'm not mistaken, a couple weeks or so ago. So it is remarkable. And obviously a lot of it's predicated on some of the earnings we had last night, which, you know, I'm not a hater. I didn't think they were all that impressive, but obviously the market's having a bit of a different view.
Yeah, maybe we can go toggle back and forth between the 1 year of the SPY and the 1 year of the QQQ. I think what you're suggesting here is a couple, 20 handles or so. I mean, you know, that's some pretty decent price action if you're bullish on the S&P 500. You know, you had the concentration that we talked about in the Fateful Eight. You had one of those names just kind of fall out of bed. And even today, not acting particularly well. That's Nvidia. And we bring up Nvidia because last year it was 25% of the performance of the S&P 500. Just think about that. One stock, right? And the concentration of all the excitement here. That gap lower, that consolidation for this whole week, the fact that it's below the 150 guy, we just talked about how gaps are meant to be filled, but this one is interesting because the resistance level, the double bottom that we saw and the 150, that's going to be a significant level of resistance, especially if the fundamental story doesn't change. And when we get through next week, we'll have had Amazon and Google's earnings, and that puts together all of their major customers. If you think about Microsoft and Meta and some of the others that make up, you know, 50% of their sales. So speak to that a little bit, because the QQQ still seems to be in a little bit of a downtrend from that prior high. So Nvidia's report in about a month or so, or 3 weeks, it's really going to hold the key, in my opinion, to the NASDAQ 100.
I think that's fair. You know, and along the way, I think you would also admit, or not admit, but you'd also sort of agree that we're probably going to hear from some other people coming out of the woodwork in terms of competition. I mean, we said, you know, you've been saying for a while that competition was coming, and it was pretty clear to me that, you know, within margins that Nvidia had, somebody was going to come along at some point. And, you know, it's not necessarily that DeepSeek is competition. It's just that I think what we learned is, you know, maybe there are people out there that are able to do more with less. So maybe the demand story is not as robust. Then we heard, obviously, from Alibaba. If you want to throw an Alibaba chart up, I mean, this has been a real performer since the beginning of the year. I think this was an $81 stock to start the year, which we're sitting right here. We're either side of $100. And by the way, I still think there's some upside here if you want to play a little stock market. And I do think the levels that we saw back in the fall, I think 118, 119 or so, I think we're going to take a visit at. But the point is, competition is out there. Companies are learning to do more with less. The 77% or so margins that Nvidia has enjoyed for a while now, I think are going to be challenged. And once the margin story starts to go the wrong way, then the whole thing, then the sort of the math starts to come into focus. And then that earnings per share, which is reasonable, is maybe offset by margin degradation. And then people look at a price to sales and say, wait a second, something's amiss here.
Yeah, and I guess the other part of the story is that investors who believe in this, secular trend and it's going to go for years, there's going to be iterations of it, right? And you're going to start to look for different ways to play it. And I think Microsoft and Nvidia this past week is kind of exhibit A for that, right? And so when you think about the results that Microsoft gave, 31% year over year growth in their intelligent cloud business, that would look great, except for the fact that it's decelerating. It would look great, except for the fact that there was a lot of multiple expansion based on that growth in that specific area. It would be great if they were seeing a better uptake of the AI enabled products, you know what I mean, that they basically embedded from OpenAI, in their offerings. And so it really is a matter of what are expectations and where are the trend of them, right? And so if you can't put your finger on how this kind of decelerating trend is going to reaccelerate to the upside, then you're going to take some profits. And, we saw that late last year with Broadcom and Marvel. These are companies that a lot of those names that we just mentioned, who have been huge NVIDIA customers, are partnering with those names to make custom silicon for the processes that they specifically want to do, whether you're Microsoft, Google, Amazon, or whoever. So again, I think it's kind of an interesting sort of inflection point, possibly in this deep seek. I love how you frame this, doing more with less. Okay, so let's think about that. If deep seek were actually able to train this model and have the sort of success that OpenAI has, with tens of billions of dollars to spend on the infrastructure side, but also chips, then you have to ask yourself whether this breakneck speed of spending by the likes of Microsoft, Google, Amazon, and a few others here, whether it's warranted. Now, if DeepSeek is basically full of shit and they've been using NVIDIA chips that they've gotten through the black market and the likes, or using data centers in Singapore, whatever, then you have to ask yourself what sort of export controls are going to be doubled down by the Trump administration. And in that case, then you lose a lot of sales, right, to Asia. And
That's
so
exactly right.
that a little bit, because that's the uncertainty that's been hanging out there. The Biden administration tried to put this stuff in place. I think the rhetoric out of the Bush or the Trump administration is going to get that much more dialed up.
Well, it's so that it's sort of a, I hate to say it this way, but it's sort of a lose-lose. It's one of two things, right? They're doing more with less, or they're doing the same amount with these NVIDIA chips that somehow they got into, your point, the black market. By the way, I don't know if this has been confirmed or not, but I think that NVIDIA, I think Jensen Huang is going to the White House either today or in the near future. That's going to be a pretty interesting conversation, because obviously what happened, I think it had to, by definition, come across the radar screen of the Trump administration. So all excellent points. I'm going to learn a lot more about earnings, but the technical, and I don't want to get bogged down in NVIDIA, but we've mentioned it now a few times. What we saw, on that 153, I think it was that 153-ish day where we had that huge engulfing pattern a while ago. We said it at the time. That was eerily reminiscent of what we saw in June of last year, and the same thing that we saw in March of last year, and both times led to a 25% move to the downside the first time, and then subsequently we saw about a 35 to 40% move the second time. And as we're sitting here right now, we got down to 118 from that 153 high. That was a pretty significant drop, and I'll say it again, I don't think it's over, Dan.
Yeah, I think what's really different about those 2 days, Guy, and I think you nailed them, you see them in the charts, those big red bars, right? So you had this gap to new highs, right? And
Yep.
you had a reversal to close on the low. That was technical. That was momentum. This gap was fundamental, right? When you think about it. And so I think that's what's different this time. But again, I think that, we've seen gap after gap to the upside in NVIDIA. This is the first meaningful gap. Those 2 days, the stock opened up and, traded higher and then closed on the low. Huge reversal. This one, it's just been, stuck in this sort of 5-day trading range below resistance. But Guy, I think one of the themes, at least in the mega cap tech stocks this week, from the ones that we saw reported, Tesla, Meta, And, we have Microsoft, obviously, they're pretty muted moves to the upside. And, I think the Meta trade's fine. It's at an all-time high, but it's off those recent highs yesterday. Maybe Amanda wants to pull up, the few-day chart there. So
And as she's pulling it up real quick, and
Yeah.
I want to address that, but it's interesting what you said about Nvidia. This time, there are fundamentals reasons around it. So the first two times it was all technical. I think we would both agree. This third time, it started as technical, had the move lower, and now all of a sudden the fundamental negatives of coming out. So you have not only a technical take, but a fundamental take, which is different, to your point, than the other two times, which in my opinion just makes it that much worse. Anyway, please continue.
No, and that's, I think, the point I'm trying to make also. Maybe you just made it a bit more succinctly, but let's look at this Meta here. I mean, so again, it had this big run into earnings. We all know that this is a company that has, this Reality Labs spend in 2021 that was meant for the metaverse, that was kind of, repositioned, right, for their AI ambitions. They are one of the few companies that has actually benefited internally from that spend, the way they serve ads and the like. So their profitability is going higher. The revenue growth has accelerated. Great for Meta. This will be really interesting from a sentiment standpoint, how long this one can stay elevated like that. The Tesla, we don't really need to get into that. That's not trading on fundamentals. I think we've gone over that over the last couple of days. The reason why that the fundamentals there kind of suck, let's be honest. But investors are not buying it for EVs anymore. They're buying it for Optimus. They're buying it for robo-taxi, and the pie in the sky stuff that Elon laid out there was enough for folks to kind of get excited about. Apple last night after the close, curious. I did not watch Fast Money. The results were coming out while you were on it. The headlines from the guidance. This is one where expectations were low on the fundamentals, but the stock had just come in really hard. It bounced on the DeepSeek news, right, as a company that had not been spending a great deal on infrastructure. I look at this and I say, I'm not sure about that guidance that they just gave. China's weak. It's going to continue to be weak. If they come out with some sort of Apple Intelligence announcement with like a partner like Baidu, which is the biggest cloud provider over there, maybe that's the sort of thing that reaccelerates growth in China, Guy. I would think that would be a priority of Apple. Thoughts on what you heard and the stock's reaction?
Well, the initial reaction, if you recall, to the extent that people here were watching, was lower. I think we got down about 233.5 or so, which actually made sense. And it's amazing. The headlines are record revenues, record. I mean, with that said, the stock is priced in. Like, the stock knows that the companies, we have come to realize that the numbers are going to be records. It's the rate of change that should be concerning to people when you look at the attached valuation. So you're talking about a company with, I think, 4% or so revenue growth, maybe 8% or so EPS growth, with margins that improved slightly. Yes, I'll give them that, but it's trading at north of 30 times next year's earnings. It's an expensive stock. And when you overlay that with the China weakness, which was, I think, down 11% or so, which is a little worse than expected. You look at services, which, again, a great number year over year growth in terms of services. I think it was up 14% or so, but now services are now, I think, only 22%, I think, back of the envelope of overall revenue. So that's starting to trend the other way, which should theoretically mean the valuation should be, I think, somewhat muted. But people took the guidance that they gave as an all clear sign, and I think that's what the market was keyed on. Now, we'll see if it lasts. As we're sitting here, I think the stock is trading 242. I want to say that it opened around 247-ish. We'll see how it closes. But, that's sort of my quick takeaway. I mean, it's fine. The numbers are huge, but we knew that already. Again, it's rate of change against a valuation, to me, that's stretched.
Yeah, and I guess Bulls will say that the margin improvement based on that services growth, based on the uptake of an upgrade cycle that's going to include Apple Intelligence, that will give you, basically more high margin sort of services. So the mix shift is changing for the iPhone. And, listen, you and we've acknowledged this full on. In 2020, this is a company that had 39% gross margins. and this year in fiscal 2025 expected to have nearly 47%. So that's been the story. Now the stock has underperformed over that long period of time while they've had that margin improvement, especially relative to many of its mega cap peers. But I think today's price action will be really interesting. I'm kind of in your camp. I think the stock will be down in the day at some point. But we will see. Let's move a little bit to let's look to PCE. Let's look at some of this inflation data. We haven't done macro in a while. Kind of a muted print, Guy. You have a 10-year yield at 4.5%. We had the Fed meeting this week. We know that this is the Fed's preferred inflation reading. I just had to say that. I know that gets excited here.
Saw me smile.
What was your take? Just kind of putting a bow on the week a little bit on the macro front. We had Fed Chair Powell, we had GDP, and we had PCE. And just, we had David Zervos from Jefferies on the show, I think on Wednesday. And for all intents and purposes, he made it sound like, Powell really missed an opportunity to kind of put his foot, on the ground or, and just suggest some pretty meaningful things about the rate, kind of policy or trend and that sort of thing and what he felt. I don't know, curious. Really what he meant was standing up to the White House. I think that's what he said.
And we'll see. It seemed, look, again, I think 2025 Jerome Powell is a much different than the fall of 2018 Jerome Powell. He was obviously new to the job then. I think he was probably far more impressionable, and he was getting sort of his feet securely underneath him. Now he's been in the job for quite some time. I think he gets it. So I don't think he's going to be necessarily bullied around by the markets or by this administration, which, by the way, I think is a good thing. In terms of yields, I'm surprised that we've gotten down to 4.5%-ish. But if Amanda quickly, and this is a static chart, you can draw an uptrend from the September low in yields. If you want to play that game, you can connect the December low. And we're probably right up in an uptrend here if you really want to get down to brass tacks. Look at the eye that I have, Dan. Pretty good, right?
Yeah.
That's from 30-something years of doing this. So we're at support. If you want to flip it around and look at TLT, people will say, the recent low in TLT or the high tick in yields was very similar to what we saw in October of last year. I think a lot of people are going to say a bit of a double bottom here. If you want to extend that out, Amanda, and go to the fall of last year, you'll see exactly what I'm looking at. I think there's some people out there that think, maybe we can get back up to, low 90s in the TLT, which probably makes us down to 4.25 in terms of yields. I don't think that's happening. We shall see. But if you go back to that slide that Amanda made, and it says the key points, and this is something that I've been trying to say, but the numbers sort of illustrate this. Personal income climbed 0.4% as forecast. Spending rose 0.7%. What does that mean? It means, again, income is going higher, but people are spending more, and they're fighting inflation with credit, as we're seeing with, if you look at MasterCard and Visa and those numbers, which were very good. Transactions are clearly up, but that doesn't mean the consumer's in a good place, in my opinion. So this just speaks to the continued battle that they're fighting, that they, the pundits will say and the administration will say they're winning. They're not winning. People are losing, and I think people understand that.
Well, again, and you often preface things by saying this is not a political statement. I think this is just a politics point here, is that, when we had the Biden administration talking the same BS about, not acknowledging the cumulative effect of inflation, but the kind of headline number coming down, you were very quick to point that out. A lot of folks I pointed out on many occasions, and the Republicans were kind of blasting them, on the campaign trail all of this year. So here we are now, and they're going to do the exact same thing. Let's just be clear. They're going
to. Absolutely. Of course they will. It's party. I'm party agnostic. Like, they all do the same shit. Yeah.
And I'm just bringing it up. So we're going to have to deal with it with both administrations. Let's just go back to that 10-year chart for a second, Guy, and to your eyeballing that uptrend and to see where that flat sort of 150-day moving average is. I think that, again, I don't have any knowledge about how, or if we have a couple more soft readings or inline sort of inflation readings, I could see us easily, Guy, breaking that uptrend and heading back towards, what is that, like 4.2 or something like that prior low. So again, what does that mean if we're at 4.2 for equities? it means that we're probably making new highs in the S&P 500, and we're going higher. You know what I mean? So again, let's take it to the chart of the day, because I think this is obviously an area that you've been really focused on. I've said it again and again. I'm not a gold bug, but you've had your finger on the pulse here. Let's go to the 1-year chart. That's really the chart that I want to focus on here. I mean, look at that. You see that guy, that internal trend line that was resistance, right? And then became support. You see where the 150-day lines up. That's where it's kind of bounced off and went straight up here. And it did that a little bit as the dollar came in, as yields came in a little bit.
Mm-hmm.
How do you think here? I know sometimes your commodity trading days kind of bring you back to a trading style where when you get to the breakout level, you buy the breakout.
Yeah.
How are you thinking about it here? Because the lower end of this band and the 150, if you get rejected there, it could be on its way back in that direction.
Yeah, I think you're right in terms of buying the breakout, right? And then today it's interesting that this is happening on a Friday, so you sort of got to pick it, and you got to sort of enjoy the weekend and hope that Sunday night, that breakout that you're trying to buy actually comes to fruition. Obviously, it could be thwarted. We've seen that before, but I'll say for the 1,000th time, I mean, the fundamental story in gold is very much intact. Gold has done well and held serve with yields going higher, which is historically not the case, with the dollar going higher, which is historically not the case. As yields have come in, obviously those headwinds have abated, created a bit of a tailwind. It's just working for a myriad of different reasons. And again, what I think you're seeing here, in addition to Bitcoin holding serve, is gold sort of continuing to make this stealth move that nobody's really all that focused on. I think more and more people are starting to talk about it, but I still think there's a huge leg higher here in gold. I don't know what the catalyst is necessarily going to be, but it's out there. And for me, gold going higher is not a great sign for risk assets, but we'll see how that plays out over the next couple months.
Yeah, and I guess the question is, and over the next few weeks, a few months, is like, what is the health of the economy, right? And so that GDP print might have caused some folks to kind of, rethink how Q1, Q2 are shaping up, and what interest rate policy means for that. What do tariffs and a trade war mean for that? What is, oil above $70, mean for that? I mean, there's a lot of kind of moving parts on the macro front. So hopefully we'll have a bit more clarity on policy. Before we
real
get
quick,
here,
I want to do this real quick because this is a great point. This sort of puts a bow on what we've been talking about. Put up Gary Webb's question, or statement, I should say. And what Gary is saying: thoughts on these companies reporting tepid to poor results. By the way, I agree with that, but they're very optimistic about the future. And all three of those companies that he highlighted, that's exactly right. I mean, Apple's quarter was okay, but their guidance was in line. People got excited. Stock went higher. Starbucks, same thing. I didn't think it was particularly great, but they talked about this basically, not restructuring, but, refocus and reacceleration, looking at growth and those types of things, the optimism around the new CEO. That stock took a leg higher. Good for them. And then Tesla, I mean, we talked about it. Those margins were 7-year lows, I think, in terms of margins. The market didn't care. That obviously their free cash flow was basically buoyed by their Bitcoin position, which they took a mark in, and I think it was a $600 and something billion gain. But everything else was just not particularly good. But the stock went higher. So it speaks, Gary, and I'm glad you pointed this out, to optimism. We'll see how long the optimism lasts. Sorry, Dan, I just wanted to get that in.
I think it's a great point, which actually brings us to next week's earnings. Now, we're just going to flash up this calendar, and we're going to focus a lot, on Monday on the tape, and also on Market Call, on some of these individual names as we get into, day by day. But I just think that, you can look and eyeball this thing. Alphabet's going to be important. Amazon's going to be important. Palantir actually is a name that you've been talking about for a while. This is also one of the early beneficiaries of, how they've been using generative AI. So, those are going to be big ones. And then there's a whole host of kind of some consumer names. So if you think about, Guy, the stuff that we've been focusing on, the generative AI trade and how it's kind of broadened out, if it has, to some other big cap tech names that have seen multiple appreciation based on the promise, and that's what you're just suggesting right there. Or Gary is asking the question on some of those individual names, but then going back to what you just mentioned about inflation and how consumers are combating it with debt, we're going to get a better read on that. Ford, man, oof, that's going to be a disaster. If you didn't like the GM quarter, I can't imagine how that one is going to be. Let's talk a little bit about the call of the day, because I think this is going to be fascinating. We're going to detail an options trade on this one. Electronic Arts. This is Moffett Nathanson. We like these guys. They are really focused on media and kind of tech in and around media. They always have been, right? For 25 years, as long as we've known them. What do you make of this upgrade call from neutral to buy, Guy?
They've been these, it's interesting. There's certain analysts out there that in their very specific verticals do a great job. So they've been neutral in this for a while. If Amanda could throw up an electronic arts chart real quick, and we'll go back to this. I mean, they've been right to be neutral. And then you look at this downdraft. I mean, good for them. But this latest downdraft did it on huge volume. If you really want to go back and look, we traded down to levels we probably saw in the fall of 2023, not 2024, 2023, of about 120-ish or so. I love this call. By the way, it did it on huge volume as well. So I think, this is what you want analysts to do. They've been neutral for a while. They've been right to be neutral. You had the downdraft. They're upgrading it on the back of that. I think it's a great call.
Yeah, I do too. And that gap, again, this is maybe the theme of the show today. Mind that gap. I mean, if you look at that one where it kind of found, maybe Amanda can put a 1 year back that we had right there. You saw that gap. It went lower, huge volume. It kind of consolidated, didn't really make a new meaningful low. That doesn't mean anything. It's one day. It is interesting to see how the stock has responded to that call. This is not some massive brokerage firm pounding the table with their sales force saying, we got a big upgrade here. This is a non-consensus call. If Amanda wants to flash back to some of the bullets that she put together on the call, you see that the bulk of the analysts who cover the stock are all neutral on the stock, right? So they're getting out in front of this thing. So, Take Two does have this huge game coming up. It's this, I know you play it. It's Grand Theft Auto, Guy. They call it.
No, yeah, I'm excited about it. Yeah.
It is fascinating.
We just call it GTA in the gaming community.
Yeah, of course they do. Of course you do. When this game comes out, this is going to be like $1 billion sale. Think about when we used to have those $1 billion movies. It seems like they don't come out anymore, that sort of thing. Just think about that. I mean, it's absolutely insane. So that's going to suck a lot of air out of the gaming universe this year. But EA, again, maybe there's a bit of a turnaround here. I like the name. You know how we have those acronyms on the fast money here, Guy? I mean, I like the name after the destruction that we've seen. It's the E in my Gen AI acronym trade here. So we've been doing this a lot lately. We're trying not to get in front of earnings news because, again, you're seeing, and we went through this with John Butters, the senior earnings insight analyst over at FactSet earlier this week on the market call, talking about some of the pain that companies that miss and guide down are seeing relative to the gains that companies that beat and guide up. And, to the downside, there's been more volatility. So this is the name on a pre-announcement. They're going to report in March. I think this trade sets up well, Guy, bullishly positioned for a call calendar trade. What am I doing? I'm selling a shorter dated call to help finance the purchase of a long dated call. Again, I want to focus on that earnings announcement. Maybe they're going to be able to explain away a little bit of the weakness. Maybe that gives the opportunity for them to sort of beat and raise going forward in the quarter. So when the stock was trading around 122.90, just below 123, I was looking at the Feb March 130 call calendar, buying to open one of the longer dated March 130 calls for about 220, selling to open one of those Feb 130 calls at 140. My max risk is that 80 cents in premium. The best case scenario for me is we get to February 21st expiration. The stock is just, 130 or lower. So it's moved up. So the longer dated March 130 call is going to gain in deltas, but the Feb 130 calls is going to basically whittle away with time decay. And so ultimately that 140 that I took in helps finance the longer dated March. And then we also have the appreciation of the call. But this trade can work if the stock just stays right here, because that Feb 130 is going to expire worthless, and helping to keep that March 130 in the game. So the worst case scenario is I have a huge move above 130, or I have a huge move lower between now and February expiration, but I'm only risking that 80 cents. Thoughts on that? Because, Guy, I'm really targeting 130 to 140 as we get into March expiration into their earnings event.
You got some time, so the Feb 130s are a little risky just in terms of time risk, because we've seen stocks move very quickly to the upside and the downside. So that's what's working against you a little bit. But you got this bounce off the low. You have this upgrade. The hope is that the stock maybe trends slightly higher over the next couple of weeks, doesn't do all that much, and then acceleration on an earnings release. Makes sense to me. It makes a lot of sense. 80 cents is not a huge risk, given, again, you have a catalyst coming up. You have this move to the downside, which you basically, if you've been waiting for a trade like this, you've been waiting for. I like it, and you look at the gap. I think there's a chance for us to sort of fill back up to that gap at 140 at some point. And if you can do that at the tail end of this, that's a home run.
Yeah, no doubt. Let me drive here for a minute. I want to go to the Robin Hood legend here and just kind of show how I would construct this trade. Here we are. Here's the 1-day options here, 0 days. We're going to get rid of that. We're going to go to this February 21 expiration. This is how I'm going to build the trade. The stock's trading again around 123. So some of the prices that we just kind of throw up there are going to be a little different. So I'm selling this 130 in February, and then I'm going to go out to March expiration, March 21st, and I'm going to look at that 130 call, and I'm going to buy it. All right. So I'm selling the Feb 130. I'm buying the March 130 call, and you can see that it costs you about 83 cents. So when we priced it up before, it's about 80. And so, you can actually, when you're going to do this, if you don't want to cross bid ask the whole time, you could put in an 80 bid, see how it trades, kind of get in the middle of that spread a little bit. But then it just depends how much you want to kind of put that trade on, and then you could cross that spread one way or another. So again, that's how I'm thinking about EA. I'm thinking about playing a gap fill. I'm thinking about targeting that earnings date, because that gap came on a big downdraft on a earnings pre-announcement. So let's see if that gets a bit better. And also, to me, I just think that this trading setup looks pretty good. Guy, let's go focus on a trade idea from, I think about a week and a half ago in Oracle. You and I both agreed that we did not like that gap to the upside, or at least the reasons that we saw that move. The stock was trading around 185. We were looking to kind of go the other way. We were looking at a put calendar at the time. We were isolating today's expiration, Jan 31, to sell that 180 put, and looking out further to buy the Feb 180 put that cost us a 170. That was basically a little less than 1% of the stock at the time. Here's a really great example of a trade idea getting a little cute. Okay, so we had this huge move. If you were bearish, it made sense to probably just figure out a way to sell a call spread, buy a put spread, maybe do both together, if one financing the other. But on Jan 31 expiration now, that's today, we have to manage that 180 put that's nearly $10 in the money. Now, the Feb is obviously appreciated a great deal, because that's the 180 put that's very much in the money, and you're long that. If I were to price this thing up really quickly, let me drive here, go back to the options chain. Let me put Oracle in here. So what am I doing? I have to make a decision today, right? Like I just said here. So let's go to Jan 31 expiration. Again, that's today. The 180 put. If I am short that means to clean up this trade, I have to buy that back.
Basically, right? Like $8. Yeah. Well, it's $7.80.
Yeah. So, and Guy, this is a really great point. So on expiration day, you're going to have a really wide spread, right? You're going to have folks and dealers widening these things out because they're looking for somebody to make a mistake. That's just really, that's options trading 101. That's some old school stuff. Now let's go to the Feb, okay? Because that was the one that we would have been long in this calendar trade, and I'm looking at the 180 put there. So if I'm long it, if I want to close the position, then I have to sell that, right? And that's also going to have a pretty wide spread because again, it's in the money. So we paid 170 for that, and you can see what it's about 185. Okay. So if you were to clean up this trade, you were going to buy back the Feb 180 put and sell the or buy back the Jan 31 180 put and sell the Feb 21st expiration. You basically made 15 cents.
Right.
That kind of sucks when you think about it, because the stock came in basically 10% from where we wanted to do. Too cute. What do they say? Buy half here, guy? Sometimes,
well, it's interesting, because it works so quickly. That's the flip side of that. It worked. I mean, your thesis was spot on. It just worked too fast, right? I mean, which is why that put that you sold sort of rallied up in your face. The hope there was it wouldn't work as fast. The put that you sold would expire worthless, and then the subsequent move would get you the gains you're seeing in the put that you bought. Didn't work out that way. It's still a winning trade. I mean, but with that said, your point is well taken. Now, you could say, you could play a little stock market here and say, you know what, that little island reversal is still intact. I'm going to suck it up. I'm going to buy back the short put, and I'm going to let the long put ride. I mean, that's then playing a little stock market. But, that's up to everything is in the eye of the beholder.
Yeah, and the only problem with that sort of strategy, and it depends on sort of conviction, is now that 180 put in February has a lot of premium. Yeah, you know what I mean? It's like well in the money. So again, if I were looking to do that, I might consider kind of rolling it out a little bit. So down and out, we would say that, kind of look at something kind of near the money. But to your point about that island, let's see if it can get through this level, this technical level at 173 or so, because look at where it gapped from. If you want to just look at my cursor right there, about the same level, look where it gapped lower, about the same level. Here we are now, about the same level here. So this is kind of some really interesting resistance. It's either going to fail here or try to fill in that gap up towards, let's call it 183 or something like that. So this sets up as an interesting one. We'll definitely take a look, Guy, at this one again, because this company does not report, I think, until late March. So this is going to give us some opportunity to take another look at this one. So cleaning up an Oracle trade today, you got to mind that expiration. This was a weekly, now it's a daily. And then you got to think about how you're going to manage the long end of this. I'm just taking it off right here. Small gain. What did you used to say? It beats a sharp stick in the eye, a little gain, that sort of thing.
Yeah, absolutely. And real quick, without question, and there are a couple questions from Eric Lancelotti, real quick. EEM, if you want to throw that up, Amanda, I only mention that because we had a gentleman from General Atlantic that thought the emerging market trade was actually going to be a big winner this year for a number of different reasons. You can go back to the Fast Money stream and look at that interview. But Eric, to your point, EEM here is actually looking to turn a little bit, and we're right up against this 150-day that's been flattening out. You close above it, and those little gaps that you see in the chart, I think, are in play. You can see a very defined downtrend quickly. If Amanda wants to go back to like September and last year, you can see the downtrend with your eye that we're right up against right now, is my sense. But, I mean, it's pretty good that I can do this, Dan. I mean, my technical skills, but it all lines up with a close above the 150 and then a close above this trend line. So I hope that helped answer the question. And by the way, you do have a little gap on reversal to the upside that we made earlier this year. I just wanted to address that because I think it's interesting, Dan, but we can wrap now.
So the gentleman that you were talking about, his name was Martin Escobari, and he is a partner at General Atlantic. This is one of the most successful VC companies. They're very focused on technology stocks or technology private companies. You asked the question, how you thinking about emerging markets, specifically South America. He really liked EWZ, or at least Brazil. So that's one, but maybe we'll take a look at too with the EEM, because EEM has also got a lot of Chinese stocks too. So it's got Brazil, it's got Chinese. That really is an emerging market focus. But let's take a look at the EWZ next week. Why wouldn't we do that?
Why wouldn't we do that? But that's it, folks. Thanks for indulging us on a Friday. Sorry that we started late. We will be back on Monday with On the Tape with Elizabeth Young-Thomas. Subsequent market call that day at 1 p.m. We're taking a look at the poll results that we put out yesterday in terms of potentially changing the time. We'll get back to you on that. But with all that said, enjoy the weekend, folks.
Yeah, but we have one more big announcement, Guy. We're going to be focused on it on the On the Tape podcast that's going to drop this afternoon. We're going to be renaming the On the Tape podcast. We're going to be renaming the OK Computer podcast. So next week, on Monday, you're going to get in your feed the Risk Reversal Pod, and we're going to be dropping that Monday through Friday. We're going to really keep it tight, be under 30 minutes. We're going to have great conversations with people like Liz, like Mike Wilson we had last week. We're going to talk to some brilliant tech investors a couple days a week. So look forward to that. You don't have to do anything. It's going to change over from the On the Tape feed. It's going to be called Risk Reversal Pod. So we're looking forward to you guys sticking with us next week with the Risk Reversal Pod, Guy Adami.
Absolutely. Thanks, everybody. Enjoy the weekend. We'll see you on Monday.